That's his age, and he is the minister. Speaking about that, we have you with us as well, speaking about all the commodities.
Right. Well, not 36 anymore, but yeah, I'll talk about the crude oil prices.
In your heart, 18.
Forever. Nevertheless, Peter McGuire, CEO at Exim Australia, now joins us. Peter, how old are you?
Oh, I'm 36 as well, the same age as you, Manisha.
All right. No, not old at all. Peter, all right. I'll talk about the crude oil prices now, where we have seen prices actually jump up quite strongly in the last 24 hours. I mean, the markets right now are waiting for the US FOMC meeting. The two-day meeting starts today, and then you have the US inflation data coming in tomorrow as well. But Peter, when it comes to crude oil prices, apart from all of this macro, it is also about various statements that we have seen come out in sense of demand expectation, deficit expectations as well for the third quarter. And that is what would you say that the markets are pricing in right now?
Absolutely, Manisha. I think that's so much to drive. I mean, it was sold down and sold down heavily, I think, after that meeting in June too, as far as OPEC plus. And yes, we're worried about that moving forward. It's going to be a gradual rollout from October to next September of 2025. And then the issue, quite simply, is there going to be enough production out there with hot demand coming over summer? So, yeah, I think I wouldn't be surprised to have another leg up from here. We'll just have to wait and see. But it's certainly very strong considering where we were last Wednesday to where we are today.
Most of the reports seem to be suggesting that crude prices perhaps will trade within that 75, 78 to 92, 95 mark on the higher side for this quarter and the next as well. As Exim Australia view, what is your sense, or what is the range that you're putting out?
I think that's pretty right. I mean, you can't, when you've got to factor in geopolitical concerns and what we've seen wiped out over the last 6 or 8 months, when it builds and then it gets wiped out. So it's hard to speculate, but there's certainly some heat in the market from a geopolitical stance, where certainly, as you just mentioned, from demand and from supply. And then the other side, of course, is, Manisha, where the US dollar trades, interest rates coming off in some of the big economies like Eurozone, but there's no talk of that yet for the Fed. So the US dollar seems to be uptick, and I think it's going to be a wild and woolly ride over the next quarter. And probably early 90s down to around about 80, and it's going to be whipsawing unless you see something dramatic happen from a geopolitical front or weather.
Peter, also, the strength in US dollar that you talked about seems to be weighing on metals right now. So industrial metals are trading slightly weak, and the precious metals definitely have come off the kind of highs that we saw in this year. So any top trade that you see within this space?
Well, gold got crushed and so did silver. They were sold off heavily in Manisha in the last few days. And of course, when you're looking at copper, aluminium, tin, all of that got pushed down hard over the last week or two. So I think that they'll take a little bit of the wind is out of their sails, but they'll come back. There's no doubting that. We've just got to see how it all moves. But if geopolitics takes off and other concerns, I feel as though gold, its best days are going to be in the second half of the year and not the first half, Manisha, and silver will go for that role as well.
All right. So roller coaster ride, of course, are there, but buying on dips is still a strategy for many of those precious metal prices. Peter, with that, thank you as always for joining in and making sense of all those price moves that we've seen in commodity markets. But with that, it's a wrap on Halftime Report. Business Nudge will take all the action forward.